Hi, I'm Tyler. This is the Stock Scores Market Minutes for January 8th, 2018. Happy New Year. Hope you had a great holiday season. I am back, ready to trade starting next week, or this week, and looking forward to it. So, this week's topic is add to your winners. When the market proves your analysis is correct, push harder. Now, you should never ever, and I'm going to say this again, never ever add to a loser. You don't want to increase your position when the market is telling you that you are wrong. However, you should add to a winner when there are more entry signals. So if you get an initial entry signal and then another one, add to that position. If the trade is working and you can add at higher prices as the trend is moving up, then that is a good thing. We want to make sure that that strength is obvious. Don't add to stocks that are sort of drifting higher. You want real strength. You want volume coming in. You want excitement. You want signs that the buyers are aggressively accumulating the stock. It's always important to practice good risk management when you are doing this. You don't want to take on more risk. So if you're adding to your winners, you should also be moving your stop loss price up as well, so that you're not taking on more risk, even though you are building a bigger position. All right, let's get into this week's analysis. Chart of the S&P 500. As it started the year, we had a nice breakout from this 13-minute chart pattern, and that broke out right there. We've been heading higher. This is important because the first week is historically a good measure of how the market will do for the year. And so the fact that we are getting strong buying to start the year is a sign that it will be a positive year for the market. And it certainly feels that way. I think we're getting a global recovery, and that is showing up in the market. Although certainly we had a great year last year, looks to me like everything is getting better globally. And as long as we don't have some bizarre event to slow that down, I think we'll continue to see some strength, although certainly we're due for some profit taking in the short term, but that doesn't mean that we can't go down for a short amount of time and then up for a longer amount of time. And looking at the longer term chart, you can see that we are getting a little bit parabolic. I've talked about that in the past. And if we draw a straight line across, if we draw a straight line across these bottoms, you can see that we are quite far above the trend line up here. And that is a sign that investors are a little bit emotional and therefore due for a bit of a pullback. But pullbacks are healthy. If you get a pullback to the trend line, you bounce off of the trend line, it recharges buyer interest, and you can make that next leg higher. So no sign of a pullback yet. It makes some sense that we'll see one. The Russell 2000 is the small cap sector, and of course that has lagged the overall market and is now starting to play a little catch up. I actually think this is where we could see some strength this year because it has lagged, and eventually you're going to get a rotation out of some of the high flyers and into some of the laggards, and one of the areas that has been lagging is the small cap, also the commodities, which we'll talk about in a moment. This particular chart, the IWM, is building an ascending triangle, and if we can get a breakout through this resistance level, which I think is quite likely, that should lead to the next leg higher for the small cap stocks. Moving along to the Toronto Stock Exchange, we got a breakout to start the year for the TSX as well. And sorry, I'm just messing around with my keyboard here. There we go. So there was resistance. There was the breakout. That points to higher prices. A little bit of pullback on Friday, but it should continue higher in the days and weeks to come. And you can see on that longer term chart, after being pretty quiet for a couple of months, trending sideways, we got that breakout to start the year, and I think that points to higher prices ahead. Sorry, I'm having lots of trouble here with my presentation. There we go. TSX Venture broke out of a pennant pattern 2 weeks ago, motivated by mining and motivated by the cannabis stocks, both of which have been doing well and both of which have a strong contingent on this market. So there was the pennant pattern. We talked about that going into the Christmas season, and I wanted this to go more like this. There you can see the breakout 2 weeks ago, another strong week this week, and it looks likely to continue higher in the weeks and months ahead. Wouldn't be surprised to get a pullback in the short term, but I like this market a lot more than I did just before Christmas. Treasury bond stuck in that sideways trading range, pretty boring. And until we can break out of this narrow range, I wouldn't get too excited about the bond market, but that's not a bad thing. That means interest rates are stable. You're not going to get a surprise to the consumer, and I think that's generally a healthy thing for the market. US dollar sold off a little bit over the holidays and is still below that all-important downward trend line that I've drawn a number of times. You can see we kind of ran down and away from it. We came back up to it, and now we're stuck underneath it. Until we can break through to the upside, we should remain relatively bearish. But what's important is that if we were to break to the upside through that downward trend line, we would be doing so from a rising bottom, and that is a healthy thing. So let's keep an eye out for that in the weeks to come. But for now, I would be fairly pessimistic on the US dollar. It is having a hard time getting through that downward trend line. Now, that weakness in the US dollar helps things like gold and oil, and you can see that we had some strength in gold over the last few weeks. This is interesting because we had a technical breakdown about a month ago, a little more than a month ago. You can see there was the upward trend line. We broke that, and that was a bearish sign. Now we have come back, but we have not yet been able to break the, I gotta draw this freehand here. We have not been able to break that downward trend line of resistance. We're rising up to it. So it's a real interesting chart. Will we break this downward trend line to the upside, which would be positive for gold, or will we get stuck there and then continue lower? I think a lot of this strength is due to some of the political things that are happening in the world with Iran, with North Korea. Those things tend to cool off, and then money comes out of gold when that does cool off. It's very rare that you get an actual real event that drives gold higher consistently over a long period of time. That's more based on inflation and that sort of thing. So we'll see if how this pans out. For now, I still don't think there's a trade in gold, unless you're a very short-term trader where you've traded that 2-week bounce, let's say. I wouldn't get too enthusiastic about gold just yet. Moving along to the oil chart, which I think is a real important one, because for 2 years, oil has been stuck underneath that line of resistance, but it has finally broken through it. Not with a lot of enthusiasm. You can see that volume is quite light. We're sort of drifting up through it. Even the price action isn't all that strong, but it's a good thing that we are at some new highs. So, I'd call this a 6 out of 10 chart because of the lack of enthusiasm, because of the lack of strong price action on the weekly chart, because of the lack of volume. But it's certainly better than not breaking out. So something good happening in oil, but I'd like to see a little more enthusiasm before I get too excited. And fear really at a low, continues to move low. Remember, this chart's always going to move down over time as there is that time value decay. So unless there's a real event that causes volatility, you're going to see this thing drift lower over time always. But it's at a low level, and that tells us that investors just don't have a lot of fear. So my ratings then, bullish on both time frames for US stocks, same for Canadian stocks. I do think there's some good risk in the market because we are going parabolic, particularly in the US side. But there's no sign of weakness, so we should remain bullish until there is. Gold, neutral, long term. You can see that I'm having a little trouble spelling neutral, but please understand that I am quite jet lagged. I was in time zone 12 hours different from my own, and I'm trying to get over that. I'll be over it in the next day or two. So gold, neutral, long-term, bullish, short-term. Oil, bullish on both time frames, as we pointed out in the chart. So stocks continue to march higher with the strength broadening to a wider range of stocks, which is a good thing. Commodity stocks getting some attention in the last little while. That weakness in the US dollar, perhaps a pickup in some political risk in the Middle East and in Korea, helping those commodity stocks move higher. Gold is trying to overcome its negative chart, but it still hasn't done that. It needs to break resistance. Oil has broken that long-term resistance and appears likely to continue higher. But as I said, there's a real lack of enthusiasm there. And as I said, also fear remains very low. All right, this week's trade of the week came on Thursday of last week. Look at how abnormal the volume is. This is a 2-minute chart. And you can see the volume very, very abnormal there, right, compared to the previous day. So that's one of the key things I look for. And then we had the break of the pullback right there. There's a message candle there, which is my little white dot, hard to see, but it telegraphed that big move higher. We ultimately moved up as much as, I think, 20 RR and then pulled back. At that point, I usually trail by 1 or 2 RR, and so got out at a nice 17. Again, I wasn't trading last week, but this is all my algorithm plotting these entry and exit points, and you can see it worked out really nice. This is one example where you want to have a willingness to add to a winner. You had another buy signal right here, and so you can buy the initial position here and then add some more here, and then even add some more here on this flag break. You know, when the stock is strong, don't think about selling, think about adding until there is a breakdown. Well, that has been the Stock Scores Market Minutes for the first week of the year, January 8th, 2018. Have a great week in the market. Subscribe to the channel. Give it a thumbs up if you like the video. I'll try to be a little more lively next week. Have a great week in the market and trade well.